Danny Riley with today's Mr. Top Step update. You know, the S&P recently made a high up at 1407.80, and over the last couple of days, after 12 weeks of going up, we're finally starting to see some retracement, quote unquote, profit taking in the S&P. But that's not really what this is all about. What this is really about is something called T+3. Historically, going into the end of March, the final 4 days tend to be very weak, but what we're seeing here over in the S&P over the last couple of days is that weakness showing up a little bit early. Now this could be very much tied to something called the quarterly rebalance. The quarterly rebalance is where the mutual funds and big investment funds get to buy and sell their winners. Right now, it looks like they're selling their winners right now. But that said, as we go into the final days of the rebalance, next week and Friday will be the last day of the quarter, what we're really concerned about is it's something that came out earlier this week about Morgan Stanley having $32 billion in equities to sell and over $21 billion in fixed income to buy going into the final day of the year. Now, our concern is with the market up so much, over 12% in the first 3 months of the year, that ideally some of these funds are probably taking profits here. And knowing that Morgan Stanley has this big trade out there that they've already advertised, it's very likely that other firms such as Goldman and other firms like JP Morgan, Goldman Sachs, etc., will have this same type of trade on their books. That said, the S&P just got down to 1381. It's the most recent low that we've seen over the last couple of weeks, and the markets are trending back up a little bit. It was our guess that the markets will kind of drift higher throughout the day. We'll be back with another Mr. Top Step update.